Well, it's my pleasure now to introduce Dr. Nahid Taher, who is president of the National Standards Finance Seeds Consulting Company and also co-founder of the Gulf One Investment Bank. Dr. Taher has set a series of firsts in the finance industry. She was the first female CEO of a Gulf investment bank, the first female Saudi to get a license for a financial advisory company in the kingdom, and the first female in a senior management position at the National Commercial Bank of Jeddah. She has represented the Saudi government, the private sector, and the Chamber of Commerce in many international business and banking events. Dr. Taher has also been ranked by Forbes magazine as number 72 of the 100 most powerful women in the world, and by the Financial Times in the top 50 businesswomen in the world 3 years in a row. So we look forward to hearing what she has to say, and I'd like to welcome her now to the stage. Thank you very much.
Thank you, Dale. Thank you. Well, assalamu alaikum, everybody. Your Excellencies, distinguished guests, it's my pleasure here to be invited by the GPCA, and I'd like to share my views on the financing of the GCC petrochemical in the new era we're having and the surrounding circumstances, okay, which I see chaos is opportunities. So when you see what's happening in the region, it's all about gaps, and gaps have to be filled by creative people. Okay? Let's go. The agenda of my presentation will include the global and GCC outlook. How is the GCC in the global arena? We're not anymore an isolated region. We are one part of a whole village, which is the globe. And then we will be talking about infrastructure and petrochemical industry perspective from my point of view. Followed by the SWOT analysis, and then the growth and financial requirements of petrochemical industry in the GCC. The global and GCC economic outlook. As you see here, the picture says, where is the compass going? Is it right? Is it left? Is it east? Is it west? Everybody is having a guess on where the global economy is going. So we have a bunch of circumstances surrounding us. One of them, as you see up, and the most important to me, is the unemployment of highly educated youth now, after King Abdullah for 10 years sending, for example, in Saudi Arabia, people to America and Europe and China and Japan, coming back with very high skills of education and willing to go in engineering and in medical and every sophisticated major, they come back and they are hired like cashiers or securities. The same applies in a relatively in the GCC as a whole. The high unemployment is very focused in Saudi Arabia because of the higher population. Well, okay, we have also oil going down massively, which is a pleasure to me, because I think when oil goes down, brains work. So, and we have the slowdown in the economy because of the oil and because of the structural fatness in the government institutions. Also, we have a lot of wars surrounding us, like the Yemen war, Iraq, Libya, all over the world. The thing that we don't realize that the value of the dollar has gone down through many decades since we pegged to the dollar. And that is creating, we will see later, a huge risk that we don't feel because we feel we're pegged to the dollar 100%, then we are safe. But to me as an economist and a financier, I see a big risk in that. Okay? And then even the American economy had a lot of guesses on what's going on, and the printing of money, okay, it's a giant economy, but there is also some deficiencies going on there, and their economists and business people are trying to solve it. So all these things are affecting our vision 2030, which is a diversification of the economy. And how would the petrochemical be a serious part, okay, of this transformation of our economy? If we look at the numbers here, we can see that there is expected shift of weight, okay, in the global economy, expecting China to grow much faster than the US and Europe, okay, and the GCC has really minor growth in that. I hope that these numbers, with the diversification happening so soon, inshallah, that we have a much bigger role in the shift of weight. If we look also at this slide, we can see the high dependence on oil still dominates the GCC economies, and the GCC real GDP is just moving down. Okay, so oil economy doesn't create jobs. Oil economy doesn't create clusters of technologies and industries and whatever. It just stays as oil. Okay, we sell it as crude. Now our opportunity in having the feedstock price lower and the oil prices lower is to go into production rather than selling crude oil. If you look at the liquidity penetration has declined in the GCC economy. We always think that M2, M1, M3 in the economy, the money is growing in the banks, okay, by numbers. But in real terms, if you look how this money affect the economy by dividing the GDP by M2, you find that whatever you inject in money, okay, although the denominator is bigger, the numerator is going down. This means the value of the dollar has impact. The non-diversification of the economy is having an impact negatively on the penetration of money, which means the rial or the dollar is not producing like before. Okay, if we look at our foreign assets, I gave the biggest example, which is Saudi Arabia. Our foreign asset has gone down massively. It reminds me exactly when the Kuwait war happened, where our reserves has declined for, the war had sucked 9 years of reserves for Saudi Arabia only. And this is now happening because of the oil prices down and the expenditures on the wars and the geopolitical uncertainties. There is a volatility in our currency, which I said about the dollar, okay, peg. Look at the currency mismatch, the difference between the growth of GDP and the foreign loans to foreign assets. Okay, this is a measure of currency mismatch. It has very, very clear negative relationship, meaning that is the volatility in our currency in real terms. Although we are pegged, but there is a huge volatility creating risk. Okay, I'll come back on how this will affect the financing of petrochemical. Okay. Also, the inflation. We announced inflation in our books of our statistics in our GCC authorities, okay, saying it's 2-3%. I'm telling you the real inflationary gap as an economist is measured by the change in GDP relatively to the change in M2, which is the local money supply, okay? That shows you how big is the inflationary gap, is the space in the middle between the orange and the blue. So the inflation is much higher in reality than the one said in books, because the basket of goods and services included in the CPI is very old and different than reality. This gives you an exact measure of inflationary gap, which means in order to avoid this, you have to work heavily on seeing the two lines, how you can how you make the gap disappears. Okay? Now we go to the infrastructure and petrochemical industry perspective. After seeing the macroeconomic level regarding, I have a lot of data to tell about, but just I took the most important related to financing petrochemical, that because any petrochemical industry in the Gulf has no issue of allocating money. The only issue is mitigating risk. Okay, risk is what we have to work on. And I'll come back and saying what exactly we need. Looking at the industry overview, the GCC petrochemicals industry continues to expand in 2017 with the completion of the phase 2 of the Petro Rabigh complex in Saudi Arabia, for example, a joint venture between Saudi Aramco and Sumitomo. This followed by opening in 2016 the Sadara complex, and many things are happening. Okay. Low oil prices have also reduced government revenues, prompting a reduction in feedstock subsidies that are undermining the competitiveness of the GCC petrochemicals. Saudi Aramco is seeking to list a stake on the Saudi Stock Exchange, while the Crown Prince Mohammed bin Salman has called for both Aramco and SABIC to be owned by the state sovereign wealth fund. So all these happening are a way of investment surrounding the petrochemical industry and the whole GCC. And I'm sure UAE, Qatar, Oman, and Bahrain also have their own part in that. But Saudi Arabia, of course, is the majority in that regard. Kuwait also has a good petrochemical investment. By 2021, we forecast that ethylene and propylene capacities will rise to 18.2 million TPA, and the growing restrictions on gas supply also means that feedstock prices could rise further. Of course, you are the experts in and the engineers in the petrochemical industry, but I would like you to join me and engineer also the financing to this industry and thinking around all these obstacles and challenges, okay, how to make our industry competitive because we have the lowest feedstock price. The Saudi petrochemical industry, for example, has an expansion capacity to reach around over 100 or 110 million tons by 2020. This is a forecast. Okay, mainly in the feedstock usage, it is ethane, and then in the capacity of the Saudi petrochemical, it is ethylene. Okay, what are the SWOT analysis behind this? The strength, GCC have the largest oil reserves in the world, along with the significant gas reserves. Okay, the government have undertaken substantial investment in the sector and encouraging foreign companies to enter into new joint venture, but they are opening now for companies to come by themselves. So the operational efficiencies are going to come and might compete with our local because our operational cost is so high in comparison to the international companies. A major increase in the refining capacity over our 5-year forecast will ensure adequate, cost-effective feedstock supplies. The GCC are well placed to export to Europe and Asia and has a strong relationship with China. Owing to significant government involvement in the sector, this is one of the weaknesses. Foreign firms can only participate through JVs. Hopefully, this is mitigated, and now companies are allowed. Hopefully, it will apply. But we would like our companies first to strengthen and have a competitive edge in their country. Project costs are coming under pressure as construction charges rise significantly. Okay, and due to high demand for contractors and equipment, this could result in the cost overruns. Opportunities, Southeast Asia has emerged as a major destination for the country's petrochemical output, with the country being well located for trading. I hope also that some of our petrochemical companies would go and do major acquisitions for successful petrochemical companies internationally, or go into downstream and outsource it to and be a small partner with the majority coming from other SMEs investors, and start very, very downstream petrochemical industries. Large-scale expansion are underway for various petrochemical production facilities, and government support for an upward movement in the petrochemical value chain in the form of incentives, exemptions, grants, whatever is happening, because petrochemical and clean energy is one of the priorities in our diversification program. Threats: the slowing Chinese economy could negatively affect Saudi Arabia and the GCC export. Deterioration in the security situation and possible succession issues could deter foreign partners. This also could be solved, and I have the solution for you guys. The GCC could face a shortage in its preferred stock, ethane, as well as rise in the feedstock cost to above the US level over the forecast period. This would negatively impact the country's export market. Now, growth and financial requirements of petrochemical industry in the GCC. The total infrastructure, including petrochemical, I consider petrochemical is one of the major infrastructure projects, and I include it in our statistics and in my bank and the companies I work in. So is expected to around $2 billion. Equity needed for that, if 30-70% formula is happening, around $650 US, what is raised only less than 5%, $28 US billion. So you see the financing gap needed, okay? And especially now, with low oil prices, there is no or less government support for such industry. So what we have to attract is really intelligent money coming from abroad. Intelligent money meaning not only liquidity or private equity funds or whatever, no. Specialized investors that know the industry and really realize the long-term maturity for such an industry and the benefits for that, and continue to invest in the chain surrounding the main industry of petrochemical. If you look at the Saudi infrastructure investment, how much it declined in the middle of the 80s and the 90s, and then now it went up and then came down slightly, and now it's required a lot of maintenance for the old infrastructure and new infrastructure coming in. If you look at the income multiplier, okay, GDP, it's an average, weighted average of GDP divided by loans to each industry. Look at, separate from the agriculture, ignore the agriculture because there are not so much loans and a lot of subsidies happening there. The mining, imagine how much it is declining because no investment going there. Okay, and no real production going there. But look at the industrial, it keeps to be around 3. It used to be 4, but now it's 3 because of the lot of restrictions and the labor problems and whatever. Okay, utilities used to be 5, and now it went down to 1 because of the subsidies and removal. And also, very important to know that the old planning of creating big desalination plants and big power plants to feed 6 cities in once and whatever was, to me as an economist and as a banker, I believe it was a big mistake because that has a lot of cost. And building the plant himself and using crude oil, and also in the high pressure pipes that they put to feed water all over the country. So utilities have been really, really a mess. And this is also very highly political risk. If one of these desalination plants have been bombed or something happens to them, okay, by terrorists or anything, the 6 cities in once could be thirsty. So that's the way of, we invested heavily in infrastructure in the wrong way. Now I believe it should be on a smaller scale and more efficient, because I personally built that desalination plant that produced cubic meter of water, 3 riyals, in comparison to the government getting into the same place with 11 riyals. That tells you that we need to restructure our mindset and investing in infrastructure to give utilities a much better situation. I believe solar energy will give a push to the utilities multiplier, and also desalination with reverse osmosis and green energy would have also a very effective increase on the multiplier of utilities. Now, if you look at the major parts or the major sectors in our economy until now is construction and trade. Okay, construction and trade, look at the multipliers they're having, is a very low thing. And that's where all the money of the banks are concentrated. Okay, because it's short-term lending, by the way. And that's what our banks have. And the killer is the finance, where banks are really here sharks, taking huge money from mortgage and personal loans. This is killing our humans. Wallahi, it is a big, big wrong mistake, thing they're doing there, where they absorb the money, take it in the finance sector, and nothing happens in the economy. Now, again, which is a big supporter, the Middle East, including the GCC, price of feedstock is the lowest. This is the competitive advantage we have in comparison to any other regions in the globe. I picked up some companies from Saudi, Gulf, Middle East, then Europe, and America, and I was really surprised by the ROE, okay, and then the ROA, and you look at the Lyondell Basel Industries, 55 ROE. I would like to go and join them, put all my money with them. And while we have the lowest price, look at SABIC, 11%. So financial engineering, not only chemical engineering, need to be done in your companies, guys. Look at the market cap. Amazing. We have the highest market cap, and still we have the lowest performance. I don't know. Where are your financial CFOs? Should be fired now. Okay. Solutions. This is the most important part of all what we have seen is just a macro level of what's going on. I have a lot in my pocket of data, risk, return, whatever. I've done a lot in my project. And I know what's going on. And I know the opportunities in oil and gas specifically. I'll just give you an example. In Gulf Oil, we invested in a gas well in Maganda, okay, in Africa, whatever. It was with ex-Shell, 2 engineers, and we got investment, and now it is 80 times up because we found gas, condensed gas of top quality, and Glencore has joined us as an investor. So what we need to say is that invest in the right direction, create the change. Don't wait to receive things from the international economies and follow them. You create change. You have the competitive advantage. Okay? The first thing, we have to have an export credit bank. I know in Saudi we had one, but it was a failure. But we have to do another one, which is based on international standards, but customized to local needs. The other thing is that political risk insurance. In our project, throughout my life when we finance project, nobody here does political risk because international world deal with us as a very risky region. While risk, I believe, and from what I saw, is sector-related, not country-related. Petrochemical should not be treated as risk in the GCC. Petrochemical is up there in the whole world and should be treated as a sector that is very successful and could be really re-engineered to produce the best labor and quality money. So political risk is there. For example, IDB in Islamic Development Bank provides political risk, which should be bought for each deal and mitigate any political risk you could have. Sukuk with secondary markets, of course. We need to issue sukuk rather than bonds. It's asset-backed. You are the perfect industry that could issue sukuk because you have great assets backing it, and then you can have it sold and traded in the secondary market in coordination with the capital market authorities. Credit securities, you can work hard on your credit securities by issuing credit securities. Okay, so this will lessen the risk for any international investor to come in. Pension funds. Pension funds could be your source of funding, and I'm delighted to tell you that I personally have a joint venture with National Standard Finance, okay, that they are an investment arm, and you can look them in the web, of the American and some European pension funds, okay, who has $2 trillion and the first time to come to the region ready to leverage your industries with a very low prices, no installment payments, only balloon payment at the end, and for long-term maturity to 30 to 40 years. Because I know in our petrochemical industry, our loans are short-term, which is very much increasing the weighted average cost of capital. Our companies are very much loaded with leverage, and that could be bankrupted sometimes. So we need to re-engineer our financing and get relaxed with these pension funds. They're all over the world, okay? One of them is currently in the region and willing to put huge money to your industries, and they're not asking for government guarantees. And contrary with other banks internationally, they are very competitive with local banks, okay, because they are the cost of financing is almost half of the price of commercial banks locally. Okay, we have also sovereign wealth funds could have an impact in going into petrochemical industry, which will increase the profitability of these funds and increase the productivity of the countries, shaping up local banks to give long-term debt. Currently, our banks cannot give long debt, so they should join somebody like National Finance and go into long-term debt. A loan, B loan structure. PPP, of course, you can go PPP with private sector and local governments, and this is all possible to lower your cost and increase your maturity and be patient to receive good revenues. PPPP, quadruple P, this is with copyrights reserved to me personally. I believe philanthropy, private-public partnership should happen. We have a lot of awqaf money sitting down doing nothing, buying lands and buying real estate that is deteriorating. They should come in sustainable industries like petrochemical, especially in the non-risky side. So this could be utilized massively, and this happened in the past with many. If you look at the history of awqaf and philanthropy, you could find them going heavily in industry and sustainable income industries. Valuation of intangible assets, which is not happening in our region as much. We should really have a good valuation of intangible assets and technology patents and register them. So this will increase the value of our companies and our industries. Outsourcing downstream project, don't be tycoons all the time and get all the projects even in the downstream. You should guys You should outsource downstream industries to SMEs and seek the growth of the economy. They will come back as your customers anyway. This is a kind of project finance. It's just a sample I would like to give. Look at the partners. All the projects you should do, not from the holding company, you should do project finance off balance sheet and try to get the financing for the creditworthiness of the project itself, not for the company as a total. So it will be much less of cost and more lucrative and more trusted, because you can secure everything here, okay, as partners and contractors. For the project itself, you don't need to work on the whole company to prove financial stability. Welcome to the GCC economy. Bienvenue, l'économie GCC.